Hello students and welcome to the lecture. So students, as we know that we had started our discussion over the financial market organizations and companies, right? And the previous lecture that we had discussed, that was the part 1. In this lecture, we are going to talk about the financial markets organizations and companies, and this is going to be our part 2. Okay? So, in this lecture, basically, we will talk about the further aspects that we require to cover in financial market organizations and companies. Like we will talk about the over-the-counter OTC telephone market. We will talk about the NDS-OM web. We will talk about the major players of GSEC markets. We will talk about the role of the Clearing Corporation of India Limited, in short known as the CCIL. Then we will talk about the roles and functions of FIMDA. We will talk about the capital market, primary market, secondary market, instruments of the capital market, and STT. Then we will talk about the financial organizations in India. Then we will talk about the Export Import Bank of India, in short known as the Exim Bank. Then we will talk about the current chairman. Then the objectives of Exim Bank. Then the Small Industries Development Bank of India, SIDB. Then we will talk about the NHB, National Housing Bank. Then Industrial Finance Corporation of India, IFCI. And at last, we will look upon the summary of all the things that we would discuss. So this is going to be a course of action we are going to take in this particular lecture. But before this, as usual, we have our small disclaimer over here, which we require to understand. So a disclaimer is like this. The images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this track and have any concerns or issues, then please contact us at sathee@iitk.ac.in and we shall remove the images. Now let's begin with the topic. So here the first thing that we are going to discuss is the over-the-counter OTC / the telephone market. So these are two alternative names we used for the same thing. Like we could say, in this market, a participant who could be anyone, a buyer or a seller of the GSEC. The GSEC stands out for the government security. Okay. So he or she who wants to buy or sell the GSEC or government securities, they have the facility to contact a bank, the primary dealer, the financial institution, either directly or through a broker, okay, and negotiate a price and quantity of security. Okay, so we could say they have a choice whether they would like to go directly, okay, directly they contact with the bank and PD and financial institution, or they have their own broker who is dealing with the bank, PD and financial institution on behalf of the main participant to negotiate the price and the quantity of security. Such negotiations are generally done on telephone and deal may be struck if both the counterparties agree on the amount and rate. Okay. Then we have NDS-OM web. What is this? NDS-OM web. So basically that is the product of RBI, the Reserve Bank of India. The RBI has launched NDS-OM web on June 29, 2012 to facilitate direct participation of gilt account holder, in short known as the GAH. Now remember, T-bills, government securities, GSEC, gilts. Again I'm repeating, T-bills, government securities, GSEC, gilts. These four names are denoting the similar thing, that is the government bonds and the government securities. Okay. We could pronounce them by different names, but the product will be the same. That will be a government security. Okay. So basically, the gilt account holders are those which are holding the government security, whether they want to buy more or want to sell them. Okay. So they could be facilitate their direct participation on NDS-OM through their private members, PM, as risk controller only and not having any role in pricing of the trade. Like you can say, the primary members are not entitled to play their role in pricing of the trade. The only thing that they have is to control the risk factor for the main participant. Okay. The GAH generally having the access to the same order book of NDS-OM as the PM. The GAH are in a better position to control their orders, like the place, the modification, cancelling, holding, releasing, and having access to the real-time live quotes in the market. Major players, if we talk about in the GSECs or the government securities, the major players of the GSEC markets, including the commercial banks, primary dealers, besides institutional investors like insurance companies. Okay. Now you can say, we understand the PDs, we understand the investors, insurance companies, but why the commercial banks are participating in? Why they are not lending that amount which they have with them in form of deposits? They are not lending it, but they are buying the GSEC. Why? So basically, you have to understand the simple mechanism here. And what is that? Basically, suppose if the bank having 100 crores with it as the deposit, out of this 100 crores, the bank could not utilize 100 out of 100. They have to keep some amount with themselves as a reserve in order to meet their NDTL, net demand and time liabilities. Okay. So first reserve that they are required to keep with Reserve Bank of India from their deposit is CRR, cash reserve ratio. Okay. So for example, we just taking it as a 10%. The 10% CRR from the bank has been kept with the Reserve Bank of India. Now what they have? They have 90%. Okay. Sorry, 90 crores. Out of this 90 crores, again, that 10% is required to keep with the bank itself as in SLR, statutory liquidity ratio. So 10% of 90 crores is 9 crores. So this 9 crores, the government could, the bank could not lend out to the people. The bank required to keep it with itself. So by keeping it with itself, the bank has, you can say, no profit and nothing. So generally, the bank utilized this amount to buy the government securities, because the government securities earning them the interest, and there are loss minimum chances that the government will default on its payments. So it is a safer and beneficial investments for the commercial banks to earn the interest even from their reserve. The CRR they could not utilize because the CRR is being kept with the Reserve Bank of India. But the SLR, they are allowed to buy the government securities and other safer investments only. Okay. After them, the other participants, including the cooperative banks, regional rural banks, mutual funds, provident and pension funds. These are also the participants of the GSEC government markets. Then foreign portfolio investors, FPIs. They are allowed to participate in the GSEC market within the quantitative limits prescribed from time to time. Like you can say, the portfolio investors or foreign portfolio investors, they are those who are participating in the Indian financial market for their own benefit. Okay. So their incoming and outgoing could have impact on the financial markets. Like you can say, if they are coming to the market, then they are infusing their money. And when the money will be infusing, automatically the prices of the securities and all, they will be higher. The market value will be higher. But suddenly, if they withdraw from the market, then prices will fall and the market will crash. Okay. So because they have the impact on our financial market, their incoming and outgoing matters for us. That's why they are allowed to participate in the GSEX market, but they having some quantitative limits that is prescribed from time to time. It means they are not allowed to invest whatever they want to. They could invest up to certain percentage also. The corporates also allowed to buy and sell the GSEX to manage their overall portfolio. Okay. Now the role of the Clearing Corporation of India Limited, CCIL. What is that? So the CCIL is actually the clearing agency for GSEX or the government securities. It acts as a central counterparty or CCP for all transactions in the GSEX by interposing itself between the two counterparties. Okay. In effect, during settlement, the CCP becomes the seller to the buyer and buyer to the seller of the actual transaction. All outright trades undertaking in the OTC market, over the counter market, on the NDS-OM platform, they are cleared through the one common organization that is known as the CCIL, the Clearing Corporation of India Limited. Now, role and functions of FIMDA. So, before understanding the roles and functions of FIMDA, the first thing that we require to understand over here is the full form. So, the FIMDA stands out for Fixed Income Money Market and Derivatives Association of India. Okay, again I'm repeating. Fixed Income Money Market and Derivatives Association of India, or FIMDA in short. It is an association of scheduled commercial banks, public financial institutions, primary dealers, insurance companies, and got incorporated as the company under the Section 25 of the Companies Act 1956 on date of 3 June 1998. FIMDA is actually a voluntary market body for the bond, money, and derivatives market. It is having the membership representing all major institutional segments of the market. The membership includes the nationalized banks like the State Bank of India. Nationalized banks are those banks which are now under the control of the government, and associates banks of the SBI and other nationalized banks of country. Apart from nationalized banks, they also having the private sector banks like the ICICI Bank, HDFC, and foreign banks also like Bank of America, Citibank. Apart from these banks, financial institutions are also there like IDFC, Exim Bank, NABARD. Insurance companies are also there like Life Insurance Company, ICICI Prudential Life Insurance Company, Birla Sun Life Insurance Company, and all other primary dealers. So these all are having their membership in the IMDA, and that's how the IMDA represents almost all the major institutional segments of the market. We are not talking about the minor segments, they could be left out, but the major institutional segments which having the impact on the markets, they are presented by the FIMDA. FIMDA represents the market participants and aids the development of the bond, money, and derivatives market. Act as an interface with the regulators on various issues that impacting the functioning of these markets. Also undertake the development activities such as introduction of benchmark rates and new derivatives instruments, etc. Now the capital market. It is a market where the investors, buyers, issuers of securities, sellers engage in issue, subscription, trade of financial securities like shares, bonds, etc. They all are here in the capital market. In this market, only the long-term securities are traded. The securities which having the maturity more than 1 year or 364 days. In the money market, short-term securities are generally there. Okay, having the having the timeline of 91 days, 181 days, and then the 365 days. But in the capital market, similar functions are there like the money market, but the duration of maturity is higher than this, which means more than 1 year. That's why we call it as a long-term security traders. It consists of two types. First is the primary market. Second one is the secondary market. Now let's understand them both. First is the primary market. So before starting the primary market, let me tell you one thing in a straightforward manner. The primary market is for the first time. Now what does it mean? Let's understand. In this market, securities like the shares, debentures, bonds, and any other type, they are offered to the public for the first time for subscription with a view to raise capital fund. Like you can say in a primary market, any company XYZ, they launches their share debentures bonds for the public subscription to raise the capital, but they are launching it for the first time. In primary market, issues are classified into the public rights or preferential issues, also known as private placements. The public issues could be classified into the IPOs, initial public offerings, and further follow-on public offerings, FPOs. Okay. Now, when a company makes either a fresh issue of shares or an offer for sale of its existing shares, or both for the first time to the public, then we generally call it as an IPO, the initial public offering. When a company which is already listed company in the market either makes a fresh issue of securities to the public or an offer for sale to the public through an offer document, then it is known as the FPO. Now, RI, rights issue, is one. When a listed company proposes to issue fresh securities to the existing shareholders as on a record date. Then, a private placement is an issue of share or convertible securities by a company to a select group of persons under the provisions of Section 81 of Indian Companies Act 1956, which is neither a public issue nor a rights issue. All right. Now, secondary market. What do you mean by it? Once the securities are issued in the primary market and listed in the stock exchange, these could be traded in a market called the secondary market, which is a platform for the investors to buy and sell the securities. The secondary market refers to the market where the securities are traded after being initially offered to the public in the primary market and all listed on the stock exchange. So we could say the secondary market is secondary to the primary. In primary, the things are done for the first time. In the secondary market, the things are done more than times. That's why it is known as the secondary market. Now the instruments of capital market. First, equity. The ownership interest in a company of holders of its common and preferred stocks. Now, cumulative preference shares. A type of preference shares on which dividend accumulates if remain unpaid. Then, cumulative convertible preference shares. A type of preference shares where the dividend payable on the same accumulates if not paid. Then, debentures. Bonds issued by a company bearing a fixed rate of interest usually payable on specific dates and principal amount repayable on particular date or redemption of the debentures. Now, what is STT? So actually the STT stands out for the Securities Transaction Tax. In short, STT, which is actually a tax levied on all transactions done on the stock exchange at trades. It is prescribed by the central government from time to time, and Government of India notified the Securities Transaction Tax Rule 2004, and STT came into effect from October 1st, 2004. So that tax was actually introduced in the year of 2004. Okay. Now let's have a look on the financial organizations in India. First is India Infrastructure Finance Company Limited, IIFCL. IIFCL is a wholly owned Government of India company set up in year 2006 to provide the long-term financial assistance to viable infrastructure projects through the scheme for financing viable infrastructure projects through a special purpose vehicle called the India Infrastructure Finance Company Limited, IIFCL, broadly refers to as the SIFTI, SIFTI. The sectors eligible for financial assistance from IIFCL includes the transportation, energy, water, sanitation, communication, social and commercial infrastructure. The authorized and paid up capital of the company as on 31st March 2017 stood at rupees 6,000 crores and 4,002 crores respectively. Now, if we talk about the vision of IIFCL, to provide the innovative financing solutions to promote and develop the world-class infrastructure in the country. What is the mission of the IIFCL? To adopt the best practices in financing the infrastructure and develop core competencies in facilitating the infrastructure development, developed a team of highly engaged employees to deliver services in a professional manner and to the satisfaction of all the stakeholders. Okay. Now, what IIFC does? It is engaged in providing the long-term financial assistance to commercially viable infrastructure projects with overriding priority PPP projects. Now, what is the PPP projects? The PPP stands out for the public-private partnership. Like we know, we have the two types of organizations in the country: public organizations and private organizations. Okay, so in this manner, basically we brings them together and let them work together. Okay, so these projects are important for the you can say people's welfare as well as the country's economy. Okay, so if there is any PPP project, then they will get a overriding priority in the you can say IIFC in some designated sectors such as roads and bridges, railways, seaports, airports, inland waterways, urban transport, and other transportation projects. In power generation, transmission, distribution, water supply, sewage collection, treatment, disposal system, solid waste management, other physical infrastructure in urban areas, gas pipeline, educational institutions, hospitals, convention centers, hotels, cold storage chains, soil testing, laboratories, and extra. Now we have the Export Import Bank of India, the EXIM. This is actually established by the Government of India. It commenced operations in 1982 under the Export Import Bank of India Act 1981 as the purveyor of export credit, mirroring the global export credit agencies. Provides a wide range of products and services, which includes the import of technology and export products from development, export production, export marketing, pre-shipment and post-shipment, and overseas investment. Now, remember the R.C. Shah was the first chairman and managing director from 1982 to 1985. Board comprises the 12 directors appointed by the Government of India, including the chairman and managing director. This you have to check by yourself because this is actually the part of the current and changes over the period of time. Now, what are the objectives of Exim Bank? First, providing financial assistance to the exporters and importers. Second, functioning as the principal financing institution for coordinating the working of institutions which are engaged in financing the export and imports of goods and services. and having a view to promoting the country's international trade. Its act on business principles with due regard to the public interest. Now, SIDBI, Small Industries Development Bank of India. The SIDBI was set up on 2nd April 1990 under an act of the Indian Parliament to act as the principal financial institutions for promotion and financing development of the micro, small and medium enterprises MSME sector, as well as for coordination of functions of institutions engaged in similar activities. SIDBI has been working towards the sustainable development of MSME sector, includes the innovative Credit Plus model, where credit is supplemented with advisory and mentoring facility to the MSMEs. Some of the SIDBI's other revolutionary initiatives, including the MFI-led microfinance movement in India that has nurtured and strengthened more than 100 MFIs, which stands out for microfinancial institutions, and facilitated the creation of SFPs. Okay, introducing a culture of energy efficient and sustainable finance for the MSME. SFP stands out for small financial banks. The mission of SIDBI to facilitate and strengthen the credit flow to MSMEs and addresses both financial and development gaps in the MSME ecosystem. Now, what is the vision of SIDBI? To emerge as a single window for meeting the financial and development needs of the MSME sector. Second, to make it strong, vibrant, and globally competitive to position SIDBI brand as the preferred and customer-friendly institutions. Okay. Now, this is again you have to check by yourself because this is the part of the current and could be changed anytime. Okay. So basically, this data has been remain as the same till now. So we could be authenticate on it. The SBI having the 16.73%, Government of India having the 15.40%, Life Insurance Company having the 14.25%, National Bank for Agricultural Development having the 10%. Okay. Now, National Housing Bank. So, the committee of secretaries set up the high-level group under the chairmanship of Dr. C. Rangarajan, who was the deputy governor on that time of the Reserve Bank of India, to examine the proposal and recommended the setting up of National Housing Bank as a autonomous finance institution. The recommendations of the high-level group got accepted by the Government of India, and as the following of this, the Honorable Prime Minister, while presenting the Union Budget for 1987 and 1988 on February 28, 1987, announced the decision to establish the National Housing Bank as an apex level institution for housing finance. National Housing Policy in 1988 got envisaged the setting up of NHB as an apex level institution for housing. Okay. So, as the following of this, the NHB got set up on July 9, 1988 under the National Housing Bank Act 1987. It is actually the wholly owned by Reserve Bank of India and contributed to the entire paid up capital. The general superintendence, direction and management of the affairs and businesses of the NHB West under the Act in a board of directors, and the head office of the NHB is at New Delhi. Okay. Now, what is the preamble of NHB? The preamble of the NHB or the National Housing Bank Act 1987 describes the basic functions of NHB as to operate as a principal agency to promote the housing finance institutions both at local and regional levels, and to provide the financial and other support to such institutions and for matters connecting therewith or incidental thereto. What is the vision of NHB? Promoting inclusive expansion with stability in housing finance market. Now, what is the mission of NHB? To harness and promote the market potential, to serve the housing needs of all segments of the population with the focus on low and moderate income housing. Objectives of NHB: to promote a sound, healthy, viable and cost-effective housing finance system to cater to all the segments of the population and to integrate the housing finance system with the overall financial system, to promote a network of dedicated housing finance institutions to adequately serve various regions and different income groups, to augment resources for the sector and channelize them for housing, to make housing credit more affordable. Now, it is to regulate the activities of the housing finance companies based on the regulatory and supervisory authority derived under the Act, encourage the augmentation of supply of buildable land and also buildable materials for housing and to upgrade the housing stock in the country, to encourage the public agencies to emerge as a facilitator and suppliers of the service land and for housing. Now we have the Industrial Finance Corporation of India, IFCI. It is actually the NBFC, the non-banking company in the public sector, which means government owned. Established in 1948 as the statutory corporation, manages the 7 number of subsidiaries and 1 associate under its folding. It provides financial support for the diversified growth of industries across the spectrum. Financial activities covers various kinds of projects like airports, roads, telecom, power, real estate, manufacturing, service sector, and such other allied industries. The company has played a pivotal role in setting up various market intermediaries of reputed in several niche areas like stock exchanges, entrepreneurship development organizations, consultancy organizations, educational skill development institutions across the length and breadth of the country. Corporate strategy, like to be a solution provider to the various financial needs of the industry, remain competitive, competent, and sensitive to the economic growth of the country, design customer-focused solution, enhance the reputation and image of the IFC. The journey over the 70 years the IFC has been crossed. Now, what is the mission? To be the leading development institution for industrial and infrastructure sector across the spectrum and be an influential partner in country's economic growth and development. Mission: to adopt the best practice in financing industry infrastructure and leverage core competencies promoting sustainable industrial and infrastructure development in the country. To act as a competitive, client-friendly, and development-oriented organization, delivering the financial products and services to the satisfaction of all the stakeholders. Here we have finished the topic. Now it's a part for summary. So we have seen the government securities trading, market participants, FIMDA, capital market, securities overview, IIFCL, Exim Bank, SIDBI, NHB, IFCA. Here we have finished this topic. It is requested to all of you kindly revise the facts and figures that all we have discussed in this lecture and keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.